Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Triple Q report for Monday, January 24th, 2022. Before we look at the charts, just want to encourage you to please click like each and every time you watch the daily Triple Q report. It does help us out a great deal with whether or not we're found on YouTube when people search for Triple Q analysis, Nasdaq-100, etc. And subscribe. Subscribing to the Wicked Stocks YouTube channel will provide you notification each and every time new content has been uploaded to the Wicked Stocks YouTube channel. That includes the daily Triple Q report. It allows you to see the content when it's new, fresh, relevant, and you can then more effectively use it for your trading and analysis. So let's jump into the charts. This is sort of the big picture. These are all daily bar charts, by the way. And we did have a meaningful sell signal last Wednesday when we closed clearly below that formation that is now at 372.18, that rising long-term channel bottom, then indicating 323.43, or that formation that is at 323.43 today, Monday. And I say 3 to 5 weeks. It may be much sooner, depending on circumstances, of course, so I'm not going to get too deeply into that. I will say that the SPY did close below its long-term support on Friday for the first time. It did not do it by the full 1%, though. I'm not entirely disqualifying it as a valid sell signal. I mean, after all, the Triple Q has certainly elicited its own sell signal last week, the middle of last week. And so I think this deserves another day. The only problem with another day is, we could drop another 2 or 3% on Monday, perhaps. But if we open, at or above 440.54 in the SPY, we could actually be in the process of at least a short-term rally. When I'll get to that actually with regard to the Triple Q, but the point I'm really trying to make here is the heaviness that we're seeing in the Triple Q, the 320s 3 to 5 week downside target is now, at least in its initial stages, looking like it's being backed up by the SPY also eliciting a long-term sell signal. And I say it really does need another day. I think if we gap in the SPY below last Friday's low of 437.63, I think that would be indication enough that we're likely going to have another big sell-off, but I'll let you be the judge on that one. Let's get back to the Triple Q. So once again, holding below 372.18, 3 to 5 week target at 323.43. We could get down there over the next week or two, perhaps. Now, on the way down, I do have a rising 1/3 speed line. I'm not showing all the points here, but really what I'm using is the low from March of 2020, which you can see on the far left of the page, against the all-time high that was put out in November. It's sort of an A-B. You're using those two extremes, the 1/3 downside pullback. That line is projected from the March low of 2020. I think that's the March low. Yeah, the March low of 2020. And it intersects at the 1/3 pullback point in the time frame in which that high was made. I suppose I could have taken the extra time to sort of do the XY axis, sort of the crosshairs that I've shown in the past. But it is the rising 1/3 speed line. It is often trend defining, so I'm not about to say, there's two ways of seeing this actually. I've been saying all along that the long-term trend through 2022 remains bullish, actually, above 323.43. So there's that. And I'd also said that the 372.18 formation could contain quarterly selling pressures, and from there we could push to new highs within several months. That didn't happen, obviously. And so we're obviously in a sell-off right now to long-term support at 323.43. And on the way down, I'm picking this spot at 343.71 that just may incur a decent intra-week bounce. We could test that actually on Monday, and within the week, perhaps, rally back into the 360s, upper 360s, low 370s. That's a clear possibility. With this kind of volatility, we could get up there quite easily within 3 to 5 days. And then, of course, closing below 343.71. If we do that today, Monday, I think by Friday or sooner, we will test that target at 323.43, where we can place a 2022 low and and from there rally on to new highs. The timing of that is impossible, but I'm going to say within 3 to 5 months or so, we could push on to new highs. And so there's that. Let's take a look at the support and resistance for today. I've got intraday containment levels. Right at the market, really, 352.84. It's actually just above it. We don't know, obviously, where we're going to open Monday morning. So, if we open above 352.84, we could quite easily reach 362.18 and trade inside that zone for a good part of the day, or at least in the morning. But if we break or open today below 352.84, that 343.71 speed line I showed in the last slide is in reach today, where we could actually bounce. I say in the text, we could contain an early week low at 343.71, and from there, perhaps within 3 to 5 days or several days, rally back into the upper 360s, low 370s, but still anticipating the 320s as a 3 to 5 week downside target. So, if we close today below 343.71, as I mentioned in the last slide, we could, and I think should, by Friday's close, actually reach that 323.43 objective. That's a 3 to 5 week target. And, lo and behold, it may actually have played out almost in as many days. Let's take a look at the upside with regard to support and resistance. If we push or open today above 362.18, 369.45 is in reach. To say that it's expected, that's a tough call. But I think if we push above 362.18, you should allow for that possibility. Short cover rally into the upper 360s. 369.45 actually precedes the 372.18 channel bottom. It is a new descending 1/3 speed line, and that is constructed exactly as the other one, that long-term one that's rising. This is dropping, and it is projected off the November all-time high against last Friday's low. So 1/3 back up. You draw the trend line against that November high, and you intersect it in the time frame last Friday in which the low was made at the 1/3 upside pullback point. I've been using them for years. Nothing is 100%, but these are pretty good for determining support and resistance and upward pivot points. So, on an intraday basis, 369.45 is really the beginning of a range of resistance up to 372.18 that, if tested, and it's a big if right now, if tested, can contain buying not only for the week itself, but into possibly through February trade, because below that 372.18 channel bottom, as I've been mentioning, that 323 area remains a long-term, 3 to 5 week objective that may be realized within 3 to 5 days, as I've been saying. If we do close above, truth is, even if we close above 369.45, I think that's a buy signal into later week, but you may allow for a settlement above 372.18 just for safekeeping, in which case I would then expect 389.05 possibly within 2 to 3 days, given the heightened volatility. Let's just call it 3 to 5 days. 389.05 is a descending 2/3 speed line. You close above the descending 1/3. The target is now the descending 2/3. And so 389.05 becomes a 3 to 5 day target with a settlement above, let's just call it 369.45. And 389.05 is really the start of a kind of a narrowing range of meaningful resistance up to 391.38 that can absorb buying through next week if tested by the end of this week. So there is this scenario that I don't think is likely, where we settled early week about 369.45, and by Friday's close we reach into the upper 380s, low 390s, where we could top out through next week, possibly into later February trade and fall off from there. And then closing above 391.38 would be a significant buy signal into February trade, but we are so off that right now. Just to clarify, we remain heavy once again into February below 372.18, still anticipating 323.43 as a 3 to 5 week objective. And if we settle today below 343.71, we're likely to reach that 323.43 target within the week. I think that pretty much sums it up. I'll be back tomorrow for Tuesday's Daily Triple Q report. Please click like and subscribe if you haven't already. And I think that's all that needs to be said. You have a great day.